Hello and Assalamualaikum. My name is Aryani Atika binti Arifin Agus and my matrix number is 2020987521.
Hi and Assalamualaikum. My name is Nur Syaira binti Muhammad Fazil. My matric number is 2020988323.
Hi, my name is Nur Faiza binti Razak. My matrix number is 2020987839.
Hi and Assalamualaikum. My name is Nur Faiza binti Muhammad Salihan. My matric number is 2020965773.
Hi everyone, my name is Siti Nur Salwaniza binti Shafri. My matric number is 2020987561.
Today, we would like to present about infographic project. Let's go.
I will present about consumer credit. What is consumer credit? Consumer credit is the use of credit for personal needs, except a home mortgage by individual and families. It is necessary since an individual has a limited amount of money as a resource to purchase. Consumer credit can be classified into two. The first one is open credit account. Type of open credit account that is available in consumer credit is credit card, charge card, retail charge card, and revolving credit lines or overdraft. The second one is loan. There are three types of loan, which is personal loan, education loan, and car loan. Before you use credit for a major purchase, ask yourself some question of the use and misuse of the credit. As a sample, do I have the cash for the down payment? Do I want to use my saving for this purchase? Does this purchase fit my budget? Could I use the credit I will need in some better way? And what are the opportunity costs of postponing this purchase? So, here is the question that you can ask yourself before you use the credit. Do you know there are many advantages of credit? The first one is current use of goods and services. Next, permit purchase even the funds are low. The third one is a cushion for financial emergency. It is because sometimes we use credit for financial emergency. For example, if we admitted in hospital and we do not have cash, credit is the best alternative for us to pay the hospital bill. The fourth one is advance notice of sale, and lastly, convenient when shopping. It is more convenient pay using credit because we do not have to carry cash. During the COVID-19, we are also encouraged to pay by credit because it is safer compared to we pay use cash. Just now, we have discussed the advantages of credit. Now, let us look at the disadvantages of credit. The first one is temptation to overspend. When you use credit card, we tend to overspend by more than usual. Next, failure to repay loan may lead to loss of income. Let's say if you fail to pay loan, it will affect loss in total income. And lastly, does not increase total purchase of power. Even though we use credit, does not mean there is purchase power because end up we must pay back. Next, we move to the main sources of consumer credit. The first one is commercial bank. A commercial bank is a financial institution that accepts deposit, offer checking and saving account service, and makes loan. Commercial bank makes loan to borrowers who have the capacity to repay them. Next is Saving and Loan Association. A saving and loan association used to specialize in long-term mortgage loan of houses and other real estate. SNLs offer personal installment loan, home improvement loans, second mortgage, education loan, and loans secured by saving accounts. Lastly is credit union. Credit union are non-profit cooperative organized to serve people who have some type of common bond. The non-profit status and lower cost of credit union usually allow them to provide better terms and loan and saving than commercial institution.
Today, I will present to you about investment planning. According to Warren Buffett, investment planning is putting out money to be sure of getting more money back later at an appropriate rate. There are 4 steps of the investment process. First step is establishing investment goals and objectives to understanding the role that your investment play in your current and future cash flow. Then, step 2 is determining risk tolerance and appropriate assets allocation. You can determining risk reward, time horizon for investments and return expectations. Next, step 3 is creating the investment portfolio. It's designed for long-term capital appreciation or the generation of income. Selecting the investments to build your portfolio in developing a suitable investment strategy. Lastly, step 4 is monitoring and reporting about performance of the investment portfolio relative to your state objective and the investment marketplace and the broad economy to keep your investment portfolio and decision in perspective. Then, this is type of investment planning. First, investment in saving account. The depositor can earn interest or can participate in profit sharing with the bank. Then, investment in fixed deposits has better returns than a savings account. Next, investment in shares is a type of stock that is sold to the public. After that, investment in bond is a long-term debt instrument by a corporation to finance the company's long-term asset. Then, investment in residential properties and residential home. Lastly, investment in unit trust is to get certain level of return and with an acceptance level of risk. What are important of investment planning? First, increase your saving. It is important to invest in the money with a high liquidity. This can be taken out easily when needed for educational purpose, serious illness, or other important matters. Then, maintaining the standard of living. Investment creates savings that bring an individual under a financial security net. This can be useful in difficult times. Next, financial security. If anything happens to the working member in the family, then the other members of the family will be financially secure by the investment. This is components of the factor risk. First, inflation risk. During periods of high inflation, your investment return may not keep pace with the inflation rate. Then, interest rate risk. You may invest in a bond at 6% rates, later go up to 8%, your bond price falls. After that, business failure risk. Bad management of product affects stocks and corporate bonds and mutual funds that invest in stock. Next, market risk. Price fluctuate because of behavior of investors. Lastly, global investment risk. Change in currency affect the return on your investment. As you can see here, this is the statistic of foreign direct investment in Malaysia from 2008 to 2009.
What is retirement planning? Retirement planning is the process of setting retirement income goals and the action and decision necessary to achieve those goals. Retirement planning entails identifying source of income, estimate expenses, putting a saving plan in place, and managing asset and risk. Next is the importance of the retirement planning. The first importance of retirement planning is to live a comfortable standard of living during retirement. Second is to determine the level of income needed during the retirement. Next, we go to retirement planning process. The first step in retirement planning process is set your retirement goals. Second, gather information and make sure your assumption. Third, process is input all data in planning software. Fourth, review and revise the plan as market and circumstance change. Fifth, make a plan of action for different scenarios. And lastly, examine the retirement projection. The next slide is component of retirement planning. The 5 basic components of the successful retirement plan are as follows. First component of retirement planning is lifestyle. Take into account your retirement lifestyle, including where you will live and how your finances will change. Some people spend a little more money when they are newly retired doing things that have been waiting for such a charming. Second component is income. How are you going to fund the retirement lifestyle you desire? Assess your retirement income, taking into account resources such as social security benefit, pension, and other income you may have from a part-time job, farm, or business interest. Third component is risk tolerance. Each investment carries some level of risk. The greatest risk, however, is not planning. Fourth component is long-term care. Who will take care of you and your spouse as you get older? This can be costly in way you aren't aware of right now. Fifth is help from financial advisor. Opening a conversation with an independent financial advisor is one of the most valuable partnership you can have. The next slide are risks of retirement planning. The first risk of retirement planning is longevity. The risk of outliving your expected lifespan. If you live longer than your saving, you may struggle to make ends meet on Social Security alone, which would provide income just above the poverty line. Second risk is health. Unexpected and costly health problems are referred to as health risks. Unfortunately, seniors are likely to experience some years of poor health, which will result in exorbitant medical costs, particularly for those who require long-term care. Third risk is market. The possibility of investment losses is referred to as a market risk. These losses can occur even in retirement, as retirees will generally require some money invested in the stock market to earn reasonable returns. The fourth is policy. The policy risk refers to the possibility of reduction in retirement benefit. Risk factor fifth is family. The term family risk refers to unanticipated needs of family members. Seniors may find themselves, for example, caring for a sick spouse or providing financial support to adult children. Here are additional information which are the source of retirement funds. There are three of them, which are Employees Provident Fund, APF, Private Retirement Scheme, PRS, and Public Service Department or pension.
Today I'll present to you about estate planning. Estate planning is a process of disposing of an estate after one's death. Will. What is will? Will is a document in writing that states a person's intention as to how his or her estate is to be administered and distributed after his or her death. There are lots of reasons why people making the will. One of the reasons why people making the will is firstly because of the speed up distribution process. You can avoid unnecessary formalities and possibility of your assets being reduced in the value due to the long wait before a letter of administrations can be obtained. Furthermore, the reasons why people making the will is because it will make a less quarrel and confusion, especially when the husband has more than one wife. The will also appointing a trustee or educator of your choice. An educator can be individual or corporations which is entrusted with the task of carrying out the administrations of your estate in an impartial manner. There are 7 types of wills. Firstly is individual will. It is the most popular type of will written by an individual. Secondly is mutual will, where 2 persons or more write their wills in one document or separate document. Thirdly is joint will. Joint will is where 2 persons write their wills in one document. Essentially, it is 2 wills in one document. Usually, it is used by the husband and wife. Next is privilege will. Section 26 of the Wills Act 1959 governs this form of will. It is only applies to the members of nation's armed force who are currently serving in the military as well as the mariners and the seamen. Besides that, there is also an Islamic will, which we call it as a wasiat. The next one is holographic will, which it is a handwritten will signed by the testator but without witnesses' attestation. In Malaysia, such a will is not accepted since all the will must conform with the Wills Act 1959. Lastly is living will, which it is a legal document in which a person expresses his or her intention for life-prolonging medical procedures. An advance directive, a healthcare directive, or a physician directive are all terms that might be used to describe it. Malaysia does not recognize it. Okay, now let's move on to the harta sepencarian. Harta sepencarian is a property jointly acquired by husband and wife during their subsistence of valid marriage according to the hukum syara, which both parties have contributed either direct or indirect towards the acquisitions of such property. It will give lots of benefits such as convenient and easy, since all that needs to be done is for the parties. Next is no dispute, as the declaration already records the agreement between the parties. Besides that, both parties can decide and agree upon the quantum of distribution. It is give rights of both spouses fully protected, as what is agreed in the declaration is incontestable. Here comes about Fara'id. Fara'id is a part of Sharia law which stipulates how the estate of a Muslim is to be dealt with and distributed among the heirs after his or her death. One of the types of the estate in the Fara'id is immovable property, such as building, a piece of land, and plantation. Next is movable property, such as money, shares, jewelry, equipment, vehicles, and clothes. The money owed to a deceased person is also included as a type of estate in the Fara'id. Moreover, there is also property that has been mortgaged or pawned by a deceased person and that is redeemable. The fifth type is property purchased by a deceased person during his lifetime for which payment has been made by him, but which has not been delivered to him until his death. Next is mahar or dowry that has yet to be paid to a wife until the wife's death. Furthermore, other assets such as saving, employees, provident fund money, shares, unit trusts, bonds, and insurance policy approved by the Islamic law also one of the types of the asset in the Fara'id. It is also included all the aforesaid property in and outside the residence of a deceased person and all the other assets of material value.
Now, I will present future financial challenge. What are future financial challenge? Future financial challenges are the obstacles that you need to face regarding your financial problems that block you from going as you plan. It can be short-term or long-term, depends on what kinds of challenge it is. The first challenge is building a family. It is undeniable that one may spend a fortune to build a family. Putting the wedding cost aside, the daily living expenses is also expensive. The idea of having children will also burn a hole in the pocket if you do not have a stable income. Next, emergency expenditures. If your income does not cover the expenses, it's impossible to build up an emergency fund because the living cost keeps increasing day by day. Besides that, student loan. Large student loans debts can demand payments that limit your ability to buy a home or increase your saving. But delaying the payment of these debts only results in paying more interest over time. It is because of the repayment of the student loan will not be completed in the near future even with fixed payment. Then, increasing of medical costs. Increase in the cost of medical treatment due to unhealthy lifestyle, stress, and unbalanced diets can be the factors that make more people need medical treatment in the future. Last but not least is housing. The house rental cost keeps increasing annually. Even if you purchase a house, it will be the same issue. The house rate keeps increasing and you will have to consider the maintenance, the tax, the installment that will be become responsible for a long time. So, based on the future financial challenge, what you can do to overcome this challenge? First, you must create monthly budget. A budget is a monthly spending plan for money. This guides spending decisions to spend money on what's really important and necessary things. Next, buy insurance also a way to overcome that challenge. Insurance is as a protection for you and your family. Your family depends on your financial support to enjoy a decent standard of living. It means the people who matter most in your life will be protected from financial hardship if the unexpected happens in the future. Lastly, you should set retirement plan from now. It is very important because it can help avoid from running out of money in retirement period. This plan can help you to calculate the rate of return needed on investments, how much risk one should take and how much income can be safely withdrawing from the portfolio. Now, I will tell you 5 steps that you can do to set your financial goals for future. Step 1. Give your money a job. Think about your days at work. You have things you need to accomplish this week and things you hope you can finish into the future. The same is true with financial goals. What kind of life do you want now? Later, that's the jobs of your money to help you achieve. Step 2. Categorize each financial goal as short, mid, or long term. Use this as your guide to help you complete your financial goals worksheet. Step 3. Set a target date for each financial goals. Being specific helps even if you adjust the date over time. Step 4. Prioritize each financial goal to critical, need, or want. It helps to prioritize, so if push comes to shove, you know what to fund first. And lastly, step 5. Know how much you have and how much you still need to save. As an example, if you plan to buy a house in 2 years and you need Rm60,000 more for a down payment, divide that by 24 months. Then you know to save Rm2,500 more per month toward that goal. That's all from us. Thank you.